Now, the reality is everyone out there is telling you to wait. They're saying wait for a hot market to sell your home. But I'm telling you, in Coquitlam right now in the Lower Mainland, that is the single most expensive piece of advice you could ever follow. To be honest with you, if you're living in a townhouse and you're dreaming of that detached home with a yard, waiting for the market, waiting for a hot market is the one thing that's guaranteed to lock you out of that dream home forever. Look, today I'm pulling back the curtain on what I call the Strata Swap secret. I want to show you why a slow market is actually the only time the math works in your favor to move up. And look, stick with me until the end because I'm going to demo a tool that proves your monthly strata fee, that money you think is just gone every month is actually the secret key to unlocking your detached home. So let's get into it. Let's talk about this strata swap logic. This is for every family in Burke Mountain or Coquitlam West or any townhome throughout the Lower Mainland that feels stuck because they think that that price jump to a house is just way too big. But I want to show you why it's not. Most homeowners, they fall right into the hot market trap. They think, okay, I'll wait until my townhouse goes up 5%, but think about the math like this. If your $900,000 townhouse gains 5%, okay, you've made $45,000. But that 1.5 million house you've been eyeing, that same 5% gain adds 75,000 to its price. Just like that, in one single year, the gap between you and your dream home just got $30,000 wider. You're actually further away than when you started. Now, look, this is why a slow market is your window. It's your opportunity. When prices are stable, the gap narrows, it stays small. You aren't just buying a house here, you are buying the gap. While it's at the smallest point it's been in years. That is how you win in this market. And let's talk about this strata fee black hole. If you're paying $500 a month in strata fees, that's $6,000 a year just vanishing. It adds exactly $0 to your net worth. It's gone. But if you trade that $500 fee for an extra $500 in mortgage, every single cent of that is building wealth. It's principal pay down. It's your money staying in your pocket. And this is the mortgage helper advantage. In your townhouse, you've got that $500 expense, but in a detached home with a suite, you're looking at gaining $1,800 to $2,500 in monthly rental income. Now, to be honest, that income doesn't just pay interest. It aggressively, and I mean aggressively, pays down your mortgage for you while you sleep. Now, I want you to look at the wealth advantage on the screen. This is about asset velocity. Think about a 3% market gain on a 1.5 million house earns you $45,000 a year. On a townhome, it's only 27,000. That's an $18,000 annual advantage just for owning the bigger asset. Over 5 years, between that gap and the tenant paying your mortgage, you are on pace to gain an extra 125,000 to $230,000 in pure net worth compared to staying put in your townhome. You aren't just getting a backyard here, I'm telling you. You're giving your family a six-figure raise. But look, I don't want you to take my word for it. I want you to see your own numbers. I built this smart upsize calculator specifically for Coquitlam families and families across the Lower Mainland. You plug in your townhouse value, your mortgage balance, and then you put in that target price for a home that you're looking for with the rental suite. Now, look what happens when you move the rental slider around. So let's take a look here. This property, a townhome valued at about $1 million. The mortgage left on the balance is $400,000 there. They're currently paying $3,500 a month. They're looking at a target home of $1,700,000 with a basement suite. Let's say the basement suite rents, it's a two-bedroom for $2,000 per month at a mortgage rate of 3.8. when we calculate the upsize potential, you can see for an increase in their payment, their net payment after the rental income of $185 per month, it puts them on pace to gain an extra $204,000 in net worth over 5 years. When you scroll down, it outlines it here. That's a conservative outlook at only 3% appreciation per year. So it's extra equity versus staying in that $1 million townhome based on your principal pay down and your appreciation. At 3%, you would be up over $200,000 in 5 years. And at 5%, you'd be up just under $300,000 in additional net worth for your family just from making that move, which in this scenario would have cost an extra $185 a month. But the great part is that you can plug in your numbers for the property you're looking at and the current situation with your townhome. The calculator shows you exactly how that income bridges the gap and how big that gap would be for you. And it takes under 60 seconds to get total financial clarity. Now, if those numbers make sense to you, the next step is simple. Download the Smart Upsizers playbook. I'm breaking down the financing secrets the banks aren't going to tell you, like how to use rental offset income to qualify for way more than you think you can. Look, the gap is narrow, the opportunity is here, and the math is finally on your side. So stop wondering if and start looking at the math. You can get the calculator and the playbook right now. The links are in the description below. And look, if you have questions about a specific complex or a street for a home you're looking at, or the rental income of the suite, call me or text me at the number in the description below. I'm Mark Parsons with EXP Realty. Like I always say, if you don't reach out, I can't help. Let's get you into that detached home.